Folks, Chris Versace here from Tematica Research. Monday, May 12th. This is the week ahead, and we are starting off rather bigly, if that's the right word. Why do I say this? Well, over the weekend we saw some positive developments on the trade front between the US and China, and early this morning we saw more details, if you will, start to emerge, and that's kind of a 90-day ceasefire and de-escalation on tariffs between the two countries. The U.S. is going to reduce its levies down to about 30% or so from 145%, so a pretty big chop, far bigger than the one that was telegraphed by President Trump last week when he said 80%, that sounds about right to me. And China is going to reduce its duties to about 10% from 125%. So again, a big development, arguably bigger than a lot of people were thinking, but let's remember, this is really kind of a 90-day de-escalation ceasefire combination because there will be further trade negotiations that take place over the ensuing, let's call it months. And yes, U.S. Treasury Secretary Scott Bessent did share that this could very well be extended, assuming that there is constructive conversation towards mutually beneficial goals. Are we surprised by that? No, we're not. We know that this is going to be a very complex, likely protracted conversation between the U.S. and China, especially if the U.S. looks to really address bilateral trade differences between the two countries. Do we expect, therefore, to be some additional bluster from President Trump? You bet we do. That is his negotiating style, and we wouldn't be surprised that at different points in the next 90 days, or maybe even as we get close to the end of the 90 days, that he kind of gets a little, let's just call it, uppity. It would be part of his negotiating style, so we wouldn't be surprised. But all in all, we are going to see the stock market really bounce higher today. We would call this a nice relief rally. I suspect that there's going to be some short covering that's going to help pop the market, just generally speaking, but also really for those companies that were poised to really take it on the chin because of tariffs. And remember that the next week, 2 weeks, was going to really see the quarterly earnings season pivot towards retailers, ones that were likely to be really hard hit by the impact of not only the tariffs, but the reports that we've seen over the last few weeks as well about potential supply chain shortages amid dropping port volume, both in Los Angeles, but also in terms of air freight as well. More likely than not, the market is going to give these things, as well as even the inflation reports that we'll get during the week for April, the closely watched CPI, PPI. Odds are the market is going to kind of look at them with a little bit of a pass, I have to say, because they're going to be very much focused on what was announced, hinted at, I should say, over the weekend, but the details that we got this morning regarding the revision between the trading relationship near term between the U.S. and China. But with that, let's dig a little bit deeper into the week ahead. So today we know that the market's going to be largely be driven by those events. But on Tuesday, we will get the NFIB Small Business Optimism Index. Again, given the timing of this, of the collection for this data, but also for what we'll talk about in the coming days, expect the market to kind of shrug a little bit of the data off. But we will want to continue to parse it nonetheless, to at least we can refine our thinking, especially for the harder data that is more impactful on GDP expectations. So the NFIB Small Business Optimism Index, we're not expecting a lot of improvement compared to the last few months that saw the impact of tariffs ripple through. We will want to take a look at the Uncertainty Index. It has been at all-time highs, but again, here too, the market likely to give it a pass. Tuesday, we will get the April CPI report, and based on what we saw in the April PMI data from ISM, both manufacturing and services, this is not going to be a constructive print for those who want the Fed to cut rates anytime soon. Odds are we're going to see the data, tick incrementally higher, both on a headline basis, but more so on a core basis. The headline basis, the tick higher could be a little softer. Why? Well, let's think about what we're seeing on the oil front and the start of that flowing through to gas prices. So, but again, the market likely to give it a little bit of a pass. We also have quarterly results after the close on Tuesday from CyberArk. We'll be interested what they have to say about cybersecurity spending, which we know should continue to ramp higher given the pain point of cyber attacks. And if you read our signals that we put out every week, you know that there is no slowdown in this. But we'll also be interested on what CyberArk has to say about AI and on a few fronts. First, what are they seeing from bad actors in terms of using AI to augment their cyber attacks? That's the first thing. Second, how is CyberArk using AI to improve its cybersecurity solutions? And then third, we've seen this next one in a variety of companies, Amazon, Meta, for example, but how is CyberArk using AI internally to drive its own productivity, lifting margins higher in the coming quarters? So that's what we'll be looking forward to when CyberArk reports. And of course, all that will be very constructive for our AI and cybersecurity models, which you can read more about below. Wednesday, retail sales and the producer price index. Now, with the retail sales report for April, there was some concern that March was a little stronger than people expected because of a pull forward in spending ahead of tariffs. When we review the April data, we'll have a better sense as to how true or not that might be. I will share that other reports from Visa, MasterCard, even Bank of America that are monitoring credit card spending, debit card spending, are all suggesting that consumer spending slowed on a sequential basis, but we'll have a better sense when we get the data on Wednesday. We will be watching that closely as it relates to our cash-strapped consumer model. Also Wednesday, we will get the April Producer Price Index. I'm going to quickly reiterate my comments for the CPI report. Yes, we do expect the figures to tick higher month over month, more so for the core PPI, but here too, the market likely to start to shrug it off because of the developments that we saw today. However, after the April retail sales report and PPI report, we do have Fed Chair Powell making a speech. And I largely expect Powell not to change his comments from last week. We will continue to follow the data, follow our dual mandate. Perhaps he might say something, denoting that the Fed will need to now take into account the shift in tariffs between the US and China, but I still suspect Powell is going to toe the line of following the data. That means we will do the same and continue to update our thinking as we get more pieces of data. Also on Wednesday after the close, we have Cisco reporting. Now this is going to be one to watch as it relates to several of our models, AI, digital infrastructure, cybersecurity. Okay, why? Well, Cisco is a big player in cybersecurity, and its bread and butter business, as we know, kind of deals with network infrastructure. So we'll be mindful of what they have to say about cybersecurity, kind of matching or comparing and contrasting, I should say, their comments against what CyberArk has to say. But as it relates to the network, one of our thinkings has been that as AI adoption happens in the enterprise on consumer devices, it is going to drive network capacity utilization higher, fostering incremental capital spending to address those bottlenecks. That's what we'll be listening for when Cisco reports. We expect to hear them kind of talk about that. But all in all, again, Cisco's reports should be very constructive for our AI, digital infrastructure, and cybersecurity models. Thursday, this is going to be a big day for retail because Walmart reports. And we know that we have to watch this, what their comments are about the consumer, about grocery, about discretionary shopping, all of that. But we're also going to be really listening to what Walmart has to say about how it was preparing for tariffs and now, given the developments that we've talked about previously in this video, what does it see ahead? Because those comments will likely set the tone for the big wave of retail earnings that we are going to hear next week. And we'll be thinking about that really as it relates to our cash-strapped consumer investing model. Friday, last day of the week, we will get the latest report on housing starts. Candidly, given the bump up in mortgage rates that we've seen during the period of data collection for this report, but also reports of a very slow spring housing season. We're not really expecting the data to show a lot, but we will keep tabs on it as it relates to our home building and building materials model, again, which you can read a lot more about down below. So that is the week ahead and the data points that we'll be watching. I would encourage you to check back during the week, Tuesdays, Thursdays usually. We'll have some incremental and updated comments to share with you. And then come the weekend, we'll be sharing our latest batch of ripped from the headlines confirmation points, better known to us and what we call to you, if that even makes sense as English, thematic signals. So thanks for watching. Busy week ahead. Stay tuned. We've got more coming your way.